Hey everyone, welcome back to the deep dive. We're all about getting to the heart of things, right? And today, we're going to dive deep, no surprise there, into the HKEX 2024 annual report.
All right.
Now, I know annual reports, hundreds of pages, can be a bit daunting, but don't worry, we've done the heavy lifting for you. We've sifted through all the jargon, all the numbers to bring you the insights that actually matter. We're talking about how they performed, their plans for the future, the big picture stuff.
Yeah, and annual reports, they're packed with info, right?
Mhm.
Strategy, financials, you name it. So what we're going to do in this deep dive is try to understand how HKEX runs its various businesses, what drove their financial success in 2024, and how they plan to keep that momentum going, especially for shareholders. We're really going to hone in on the business side and their financial health today.
Perfect. So, right off the bat, HKX is talking about like significant strategic progress in 2024. It sounds like they've been busy, enhancing their market infrastructure, making Hong Kong even more attractive for companies to list. Think of it as fine-tuning the engine of their markets, the microstructure as they call it, and making it a prime spot for IPOs.
Right. And what's interesting is they've announced these like pretty ambitious multi-year development programs for their platforms.
Hmm.
We're not talking about small tweaks here. They're building for the future. They want to cater to the next generation of investors, and they're making some serious upgrades to their post-trade services in the stock market, specifically with the Orion Cash platform. This is about efficiency and long-term growth. For those of you who follow these markets closely, these improvements are designed to streamline trading and make the systems more reliable.
And it goes beyond just the tech stuff behind the scenes. They've expanded their product offerings, even ventured into some new adjacent businesses. Plus, they've been making moves internationally, setting up shop in Riyadh and recognizing Dubai and Abu Dhabi as stock exchanges. So they're definitely broadening their horizons.
If you zoom out and look at the bigger picture, these international moves are all about cementing Hong Kong's position as a leading global financial hub. It's about attracting international investors and global companies who want to list in a prime location. Essentially, Hong Kong is strengthening its role as a bridge between China and the global financial system.
Let's get down to brass tacks. First up, their cash market. And, we love seeing good numbers. Well, they delivered, and then some. Record-breaking fourth quarter in 2024. Peak turnover hit a whopping $620.7 billion on October 8th. I know, right? And for the whole year, their average daily turnover in the cash market shot up by 26% compared to 2023, reaching $131.8 billion. This isn't just a random spike. It indicates a renewed confidence in the Hong Kong market. This could be driven by things like increased international investment. And this kind of sustained activity, it can lead to greater liquidity, potentially attracting even more listings down the line.
That increased trading activity, well, it has a direct impact on their financials. They reported a 27% jump in trading fees from stock exchange transactions. That was fueled by that higher average daily turnover we talked about, and also by record volumes in southbound trading through Stock Connect. That's where mainland Chinese investors can trade Hong Kong-listed stocks. It really shows how directly HKX benefits from a dynamic and active market.
Now, for the cash market, looking ahead, they're planning to reduce minimum spreads for trades in Hong Kong securities. This is all about making trading more efficient and competitive. It's going to be rolled out in phases, the first part around mid-2025 and the second tentatively mid-2026.
Yeah, narrowing that gap between buying and selling prices, it should encourage more frequent trading. That could boost liquidity and make Hong Kong a more attractive market for investors. It's a smart move to stay competitive in the global exchange landscape. And they also made some improvements to their third-party clearing arrangements back in June of 24, which gives more operational flexibility to market participants, which could lower costs and streamline things for brokers and other intermediaries.
Let's switch gears to the issuer business. This is the primary market where companies go public and raise capital. In 2024, Hong Kong secured its spot as one of the top 4 IPO destinations globally. They saw a 90% increase in fundraising compared to 2023, racking up $88.0 billion through 71 new listings. It's interesting, the second half of the year was particularly busy, accounting for the lion's share of that fundraising.
What really stands out is the massive Media Group IPO in September 2024. That brought in $35.7 billion. It was the biggest IPO in Hong Kong since February 2021. And these big name listings, they act like a magnet. They draw attention and attract potential issuers to the Hong Kong market.
And it's not just about the mega deals. They also had 3 companies list under Chapter 18C. Now, for those who were new to this, Chapter 18C is a specific listing regime designed to attract like specialized tech companies. So the fact that these innovative businesses are choosing Hong Kong, it shows that the market is becoming more appealing to the new economy, you know. And there's more to come. They've got a healthy pipeline, 84 active IPO applications as of the end of 2024. That's a good sign for continued momentum in the primary market.
The success they had of attracting these tech companies under Chapter 18C, it's a key indicator that Hong Kong is adapting to the needs of high-growth sectors. A healthy IPO pipeline, it means potential future revenue for HKEX from listing fees, and it signals that investors are still interested in the market.
Okay, let's move on to equity and financial derivatives. Another record-breaking year for them in terms of trading volume. The average daily number of derivatives contracts traded went up by 15% from 2023, reaching over 1.5 million contracts per day. Similar to the cash market, the fourth quarter of 2024 saw record volumes in the derivatives market, and they've got plans to develop their Orion Derivatives Platform, or ODP.
Yeah, that increase in derivatives trading, it points to more sophisticated activity in the market as investors use these instruments for hedging and speculation. And the development of the ODP, it's another key infrastructure project. These platform upgrades are all about enhancing speed and capacity, which are crucial for the derivatives market to function efficiently and to attract more participants.
Commodities next. That includes the London Metal Exchange, the LME, and the Keyheim Mercantile Exchange, QME. The LME is still undergoing what they're calling a modernization journey. They released a white paper in September 2024 outlining their proposed changes. They're aiming to start implementing those in the second half of 2025.
That modernization is important for the LME. It's about ensuring they remain relevant in the long term and that the global metals market is transparent. The white paper and the consultations with market participants are about adapting to the industry's changing needs.
And some good news on the legal front for the LME. The UK Court of Appeal dismissed the appeal related to the nickel market disruption in 2022, and the Supreme Court refused to hear any further appeal. So it seems like that particular issue is finally resolved. They also added 11 new brands of various base metals for trading on the LME in 2024. And they expanded their network of approved warehouses, including new locations in Jeddah and Hong Kong. Starting in February 2025, the LME began daily reporting of what's called off-warrant metal stocks, which basically increases transparency. So the resolution of that legal challenge, it removes some uncertainty for the LME. The expanding warehousing network enhances their global reach, and more transparency through that off-warrant stock reporting, it builds trust and attracts more trading activity.
It's also worth highlighting the growth on their QME platform in mainland China. Trading activity in soybean and natural gas more than doubled in 2024. This shows that the QME is becoming increasingly important in the Chinese commodities market. And their collaborations with various government bodies, well, it underscores their strategic role in the region.
We should also touch on their data and connectivity segment. This includes things like Bay Connect. It's about providing market data and the infrastructure for participants to access their trading platforms. It's a steady source of revenue for them.
Right. High-quality data and seamless connectivity, they're essential for modern financial markets to function. The growth in this segment, it reflects the demand for HKEX's market information, and it speaks to the strength of their technology infrastructure.
Now, let's be real. No business is without its challenges. HKEX, they highlighted a few key uncertainties. There's the macroeconomic environment, things like changes in monetary policy, trade policies, and geopolitical developments. They also mentioned the impact of climate change and the rapid pace of technological innovation. These are significant headwinds that could affect market activity, so they'll need to adapt.
Definitely. Being aware of and planning for these external uncertainties is key for HKEX to be sustainable and grow in the long term. They need to stay agile and responsive to these global forces.
All right, so we've covered the different parts of their business. Now let's dig into the financial highlights. The headline, HKEX hit record annual revenue and profit in 2024. So those strategic initiatives we talked about, the more positive investor sentiment in the later part of the year, and their careful cost management, it all paid off.
The numbers definitely show that positive momentum. Their total revenue and other income hit $22,374 million. That's a solid 9% increase compared to 2023. And their core business revenue, which comes from their main exchange activities, also saw a healthy 9% rise to $20,559 million. Their net investment income from their own funds, that was up by a significant 18% to $1,748 million, mainly because they had lower losses on some private investments compared to the year before.
On the expense side, their operating costs did increase by 6% to $5,761 million. They attributed this mainly to higher spending on staff and IT, but they did save some money due to lower legal and professional fees related to those nickel market events we discussed earlier. Their EBITDA, a measure of their operating profitability, that rose by 10% to $16,281 million, and they maintained a very strong EBITDA margin of 75%, which means their core business is highly profitable.
That EBITDA margin is impressive. It really highlights how efficient their operations are. Their profit attributable to shareholders, the bottom line, that also saw a good 10% increase, reaching $13,050 million. Basic earnings per share followed suit, up 10% to $10.32, and they're investing in their future. Capital expenditure increased by 10% to $1,517 million, mainly for IT system upgrades.
The fourth quarter of 2024 was a standout. Their total revenue and other income surged by 31% compared to the same period in 2023, reaching $6,381 million. Core business revenue was up even more by 33%, hitting $6,017 million. And their profit attributable to shareholders for the quarter, that had a record high of $3,780 million, a massive 46% jump year on year. This strong finish to the year was driven by a huge increase in trading activity. The average daily turnover of equity products more than doubled, up 113% year on year. Northbound trading through Stock Connect also saw a massive increase. That surge in trading volume translates directly to higher fee income for HKEX.
Breaking down the performance by business segment gives us a more granular view. The cash market segment saw a 10% increase in revenue after deducting transaction-related expenses, reaching $8,154 million, and its operating profit, or EBITDA, that jumped by 16% to $7,027 million. Higher trading fees, as we discussed, for a key driver there.
The equity and financial derivatives segment, they saw a slight decrease in revenue on that side, down 6% to $6,265 million after deducting transaction-related expenses. But their operating profit actually increased significantly by 23% to $5,403 million. So even though revenue from trading might have been under some pressure, other income sources, things like clearing and settlement fees, which were up by 30%, contributed strongly to profitability, even with a 15% increase in derivatives trading volume.
The commodity segment was a star performer. Revenue, after deducting transaction-related expenses, that was up 27% to $2,188 million. And their operating profit, well, it soared by 61% to $980 million. They specifically mentioned increased trading fees for metals contracts on both the LME and the QME as a major contributor. That jump in profitability shows the leverage in this business as trading volumes grow.
Data and connectivity, that segment delivered steady growth with a 5% increase in revenue after expenses, reaching $2,073 million. Operating profit rose by 20% to $1,635 million, reflecting that consistent demand for market data and connectivity services. And lastly, their corporate items segment, which includes central costs and income, saw its total revenue increase by 15%. Their operating loss actually narrowed from $217 million in 2023 to $144 million in 2024, largely due to those improved investment returns we discussed earlier.
It's worth mentioning again that the income generated from the investment of margin funds and clearinghouse funds, which totaled a substantial $3,179 million in 2024, is allocated back to the relevant business segments, boosting their overall financial performance.
So, all in all, a record year financially with strong growth across most of their businesses. Now, how do they plan to return some of that value to their shareholders? Let's talk dividends. They paid out a first interim dividend of $4.36 per share, which was slightly lower than the previous year. However, the second interim dividend per share saw a nice jump of 25% to $4.90.
Right, and their stated target is to distribute 90% of their profit attributable to shareholders, excluding any contribution to the HKEX Foundation, as dividends. This shows their commitment to providing a return to investors.
They also outline the factors they consider when determining the dividend amount, things like their expected capital needs, regulatory capital requirements, profitability, cash flow generation, and planned capital expenditures. Interestingly, there's no mention of any specific plans for share buybacks in the information we have.
So the dividend policy clearly prioritizes giving a significant portion of earnings back to shareholders. That increase in the second interim dividend probably reflects the strong performance in 2024 and a positive outlook for their capital position. The fact that there's no share buyback announcement suggests they're focusing on dividends and investing in the business for future growth.
So to sum it up, 2024 was a strong year for HKEX, with record financial results and significant progress on their strategic goals. They've laid some important groundwork for the future.
Absolutely. Their focus on future-proofing their operations, strengthening their role as a bridge between China and the global markets, and solidifying Hong Kong's position as a leading financial center all show a clear long-term vision. Their dedication to maintaining well-regulated, efficient, and transparent markets is key to their continued success.
But, as we discussed, they do face some ongoing external uncertainties. Those macroeconomic factors, geopolitical issues, climate change, the rapid evolution of technology, all of that will continue to play a role in 2025.
Their ability to navigate those challenges, adapt to changing market dynamics, and continue to innovate will be critical to maintain that growth trajectory. Their commitment to the long-term prosperity and sustainability of their markets and the wider community shows that they're thinking about these factors in their strategic planning.
So here's a final thought for you all to ponder. Given HKEX's impressive performance in 2024 and their ambitious plans for the future, what could be the long-term implications for the global financial landscape? What new opportunities might emerge for investors as this environment continues to evolve? Lots to think about.
Yeah, that's a great question. It really highlights the important role HKEX plays in the global financial ecosystem and all the potential opportunities that lie ahead.
Well, thanks for joining us on this deep dive into HKEX's 2024 performance. We hope you found this helpful in understanding their business and financial results. If you want to explore further, you can always check out the full annual report. And as always, stay tuned for our next deep dive into another complex topic. You provide the sources, we'll do the digging.
See that?
Until next time.